Welcome to the Trading Bell Show. My name is Maina Shege and thank you so much for your company. Today we are right here at the Nairobi Securities Exchange speaking to the Chief Executive Officer, and I'm here to understand what does the market hold, especially this year, coming from a year that was quite unprecedented. We're hoping to get these insights and probably what you can do yourself to ensure that you get yourself into the investment cycle right after his profile.
Geoffrey Odundo is the Chief Executive of the Nairobi Securities Exchange PLC. Mr. Odundo, an accomplished investment banker, has been in the financial services sector for the last 26 years, 20 of which have been in the capital markets in various senior roles in asset management, corporate finance and securities trading. He is currently a director of the Central Depository and Settlement Corporation Limited, director of the NSE Clear Limited and a trustee of the NSE Fidelity Funds. He is a member of the Central Bank and Consolidative Forum for Domestic Debt Market and a council member of the Institute of Certified Investment Financial Analysts. Mr. Odundo is also a director of the Association of the Stock Exchanges of Africa and is a member of the Thomson Reuters Africa Customer Advisory Network. He holds a master's degree in strategic management and an undergraduate degree in mathematics and economics. He is also an advanced management program graduate from Strathmore Business School.
Karibu sana, Jeff.
Thank you very much.
It's good to see you, and first may I start by congratulating you. I saw that there was a full year extension of your term. That must be good news.
I think it's very, very good news.
Yes.
I feel very privileged
Yes.
to have been given the opportunity to serve one more year.
Yeah.
I think we're right at a very defining time at the NSE,
Yes.
where we've done a lot of work in terms of building products, markets and infrastructure.
Yeah.
And we're now ready to actualize some of the benefits. And I want to be there to help see some of this through.
Come into fruition. Yes.
Yeah, so I'm very excited, and I think it also gives us time to close out some of the key projects and our strategic plan.
Yeah.
We had infrastructure improvements, which we made very good progress on, digitization,
Yeah.
product uptake, and I think it's I feel very well. I feel very privileged. Let me just say that, so
Yeah.
that even if once we complete this process, the next leadership will be able to build on that momentum. And for me, I think the 1 year will be a very gracious one to work on.
Great, and we can't wait to see what is being unfolded.
Thank you.
Well, last year was quite a bit of, if I may call it, flat because of how the challenges were, not only just here in Kenya, but globally. We saw the markets really not performing as expected. And now this is sort of, we're still in the first quarter of the new year. Are we expecting to see something different, putting in mind that this is still quite a challenging year, especially economically?
Yes, I think it's going to be a very defining year for us, as I started saying. So this is 2023.
Yeah.
It's 1 year away from the end of our strategic plan, 2020-2024.
Okay.
So we keep tracking that and seeing where we are in terms of our deliverables.
Yeah.
And I think when we did our midterm, we realized that we've done most of the things. We've done infrastructure improvements, product development, and building the profile and brand of the NSE. The missing link is the market size.
Yeah.
The market size hasn't grown much.
Okay.
It hasn't grown because no new companies have come in of good sizes. The level of liquidity is not as high because stocks are concentrated on about 5 or 6 counters.
Yeah.
And so market is sort of skewed at the moment. And so working to bring in more listings is where we want to put a lot of effort on.
Okay.
We got commitment from
Yes.
the national government to do 5 listings.
Yeah.
We equally said we're going to do 5
But I wanted
listings.
to ask you, how are we looking forward to this?
Very, very much. I must say that we want to play our role as private sector to really actualize some of the plans we had around listings.
Yeah.
We're starting off with the listing of an IREIT in a couple of weeks.
Wow.
Where a substantial IREIT, almost 6.7 billion.
Wow.
And a number of other IREITs will follow.
So in a few weeks, we're ringing the bell.
We're ringing the bell.
Okay.
We're ringing the bell. The bell ringing is starting. And also a number of private sector companies who had intimated had shown interest, but now feel more encouraged because they can see an alignment between us and government.
Okay.
And so I'm very confident that this year we're going to see quite some listings, this year and into next year. Because the listing process is not a quick turnaround. It takes a bit 3-4 months to finish a process. But that's the exciting part. And of course, government coming in and giving us some companies will also give us a good contribution.
Okay.
So let me just say that we began. I know the markets are fragile, given the global factors, the economic factors locally. And so we have to keep our eyes on that, but it doesn't stop us from still continuing to sell the value proposition for the market.
You've spoken quite well in terms of some of the factors affecting the market and really what you plan to see and hope to see, especially after the president's visit here. But now looking through the entire year of 2023, which is now your year, if I may call it that, there's still some factors really that are driving the market, whether to perform or not and the likes. Some people have alluded to capital flight last year by some of the foreign investors. Are they coming back? What are you seeing and what is your expectation this year?
So we are alive to the fact that the foreign investors are still very cautious of trading here.
Okay.
And there are many reasons. For instance, interest rates in the developed markets have been rising because of inflation. And that then gives a reallocation, a higher reallocation to those markets.
Okay.
But I must say that we have to think about how do we counter this. And our focus right now is to build our local demand.
Okay.
So we have local institution demand and we have got local retail demand. We're very low local retail demand. So we want to work on a retail strategy that encourages Kenyans to save through the market. Okay. Again, aligning with government. Who wants to encourage Kenyans to save?
Going down there.
But we're not going to just talk about shares. We're talking about the value proposition in the shares. We want to show, want Kenyans to understand what an undervaluation means.
Okay.
So today, when you hear the market is undervalued, you know, you got to know that this is a buying side. It's really the good buying point and why. We want to make account opening easier. We want to make trading more easy, very easy on the hand. Access to the market right on your hand.
Wow.
So, and getting alerts that tell you, oh, the share you bought yesterday has hit 2% up. Do you want to sell? You know, things to just build, you know, some value proposition.
So is that wish of the president when he came here and he said he one day wishes to see a border rider trading come into fruition?
Yes, that is there. That we're building on that wish.
Wow.
We're actually actualizing that wish. and you're going to see that. And really, if you look at it, and we borrowed this from our study of the Indian market, where last year, despite what you call capital flight from international investors, the markets grew.
They grew.
Because of retail. So why not in Kenya? We are a very, I would say, a capital-centric society.
Yes.
We like money.
Okay.
So we just need to encourage them to know how to make it well, isn't it?
All right. I'll be coming to talk to you about the cross-listing aspect of it because I know you're part and parcel of the linkage. But first, I saw and I've been checking out on your platforms on social media and all that you were quite keen, and I saw a lot of all the persons who registered for Ibuka, the businesses there, the SMEs. I saw you having forums with them. Are we expecting something? Are there something cropping up out of them? Yeah.
So we are very focused. Ibuka came in 2017, and our whole interest about Ibuka was to encourage SMEs to tap into capital market financing. But before they did that, we have to create a learning curve for them. They must go through academy to build a knowledge and understanding of capital markets.
Okay.
We are happy that we have a first graduate, which is Homeboys, who came in 2020, and are imminently starting to trade on the market.
Okay.
So building on that success, a number of our Ibukis now have seen reality. They've seen Homeboys grow and now be able to attract investors. So they're seeing there's an actual value proposition of coming to the market. We recently held a very good seminar here where we had a panel with the Nairobi CEO, and he was able to speak about the value he has seen since he started the journey under the Ibuka program. Now that testimony is resonating with all aspirational companies. All of them who came here have a dream to ring the bell at the exchange.
Wow.
but they needed to feel it. And I think Homeboys has provided the good start to that. So we want to be able to complement the debt capital that companies borrow by encouraging them to take equity capital.
Wow.
And so we're going to be doing a lot of that sensitization and get our Ibuka companies to migrate even from Ibuka into our unquoted market segment, where they can actually start interacting with investors.
When I told some of the analysts in the market that I'm going to be speaking with you, one of them told me to ask you whether cross-listings with Ghana and the African exchanges interlinkage are being expected. Are we expecting such?
Yes, we are. We launched this market in December last year.
Okay.
So we're 3 months out. They've done what you call good actual trades.
Yeah.
So we had a trade between a company in Senegal and a company in Kenya, and the trade went in successfully.
Yeah.
You know, we believe that as an exchange with an African vision and as a leader in Africa, we must be part of a Pan-African platform where our clients are not only Kenyans, but from all markets in Africa.
Okay.
So that linkage probably is aimed to achieve that. And Kenya being a deep market will benefit.
Yes.
Because we've got attractive companies. So we are a committed member of that linkage.
Yeah.
What we're trying to do now is to get the brokers and investment banks to partner with the brokers and investment banks across all the 7 markets that have joined the linkage.
Okay.
And then start doing cross-border trading.
All right.
We should not limit ourselves to Kenya. We should actually have investors thinking about Africa as one. So riding on the Africa Continental Free Trade Area objectives, I think we are probably the first platform that has linked Africa.
Wow.
And we want to encourage that. Now in future, what that will do, it will encourage cross-listings. It will encourage companies to come and invest across markets. Okay. We now have a lot of Nigerian banks here who are listed in Nigeria.
In Nigeria, yes.
Nothing stops them from doing a secondary listing in Kenya.
Absolutely.
So Access Bank, GT Bank, they should all be here.
Absolutely.
You know, but how will we do that? Is by showing interest, by investing in these companies.
Absolutely.
And so we're out there. We're going to be talking to all of them, and we believe the linkage is a great thing for the country.
Great. Great. I must ask you to dive into this debate that has been there in the last month or so. We have all this pension debate going round. We have had NSSF, the increment come up, and private pension schemes sometimes getting worried. But you have a place as well as a platform that gives an option for them to even safeguard their money and grow their funds. I don't know, what is your comment on it, and what is your advice as well to all these bodies that are discussing this?
So I'll speak from the investment perspective.
Yes.
I think irrespective of whether the contributions are going to NSSF or private schemes, I think they'll still find their way here.
They can come and invest here.
because even the NSSF is regulated.
Yes.
So, and they've got fund managers. So with the increase in contributions, I think that money will still be invested in the exchange. In any case, I believe the activity, the contribution to the exchange will increase because they now have a huge amount of money, and if they allocate it on the basis of the current investment policy, where they give 20%, the 20% that will come to me will increase, isn't it?
It will grow.
So I'm happy with that. I think the other discussions between employers and the NSSF, I can't wade into that. There's some different team that will discuss that.
Whichever the way.
But whichever way it happens, it aggregates. It actually finds its way here. So I think it's a good thing. Increase savings for Kenyans. Get as many Kenyans to save as possible. All right. Which I think is okay.
Okay, great. It's always an honor having a conversation with you, but before you end, you must look at the viewers and give them your last word of why your place is the place to come and invest. I think it is always good to endear to them, because you have said very many things, that you come into the ground, you come into them. What's your last word to them?
So my word, and I'll really address you as investors. So dear investors, I think one of the things that we want to really tell you as the exchange is that we are an attractive investment asset class. So as you expand your horizons and as you undertake investments in other assets, I think if you want to one shop to invest, to really enjoy the benefits of all asset classes, it's in the NSE. So if you want to invest in property, we have a REITs product. If you want to invest in fixed income, we have bonds. If you want to invest in equity in companies, we've got shares, of course. We've got green bonds. We've got ETFs for people who would like to invest in commodities. And we have a derivatives market where you can actually take investments into different contracts. So the exchange provides you with that avenue to expand your investment portfolio, to generate returns, and really to discover opportunities. So I'd like to encourage you as investors to really come in, study our markets, take advantage of that. As issuers, this is the platform for you to raise money. We've got the unquoted market segment where you can do private placements. We've got our equity market segment where you can raise equity capital. We have a debt market segment where you can actually do debt capital. And beyond that, if you are environmentally focused, if your focus is on the environment and social impact investing, we have green bonds, and very soon going into a carbon market. So I think we're a holistic market that addresses all the needs of all investors and issuers. Thank you, and welcome to the NSE.
Great. It's always an honor having a conversation with you, sir.
Why not?
Yeah.
Good. Thank you.
So there you have it. That's the Trading Bell Show with Jeff Odundo, the CE, right here at the Nairobi Securities Exchange. Right now, I leave you with the markets. Welcome to the Markets Analysis, and I'm joined by Ivy Barongo, who is a research analyst at Faida Investment Bank, to help us understand how the market's faring on. Ivy, welcome to the show.
Thank you. Thank you for having me.
Great. I don't know, from top of mind, first, I'd like to hear from your end on your research side of things. How's the market doing?
The market is neither here nor there. On one end, we have increased activity in the banking sector because in a couple of days, they should be releasing their full year 2022 results. So there's positive sentiment around that. Therefore, activity has increased in that particular sector. On the other end, we have been, foreign selling pressure because of dollar issues. We have the increased rate hike and expected further increase in the US that's expected to lead to further capital flight. So it's more, 50-50 at this point.
Interesting enough, we just had a conversation with the CEO of NSE, and he said this is a time local investors should take really good advantage of, joining the markets. Now,
Yes.
Let's talk about the movers, gainers. Is there any interesting thing that you have seen, any great movements that you have seen or observed?
We've seen Cabasid. For me, they recently announced their half-year results, of which they were quite positive due to increased business expansion regionally, as well as pick up in their domestic business, which has created a lot of positive sentiment. So I guess that attributes to it being on the gainer segment.
Do you have a comment on the bonds market? How is it faring on?
We're seeing investors opting for the shorter end to avoid duration risks due to the current uncertainties in the economy. So we're having the T-bills being oversubscribed as opposed to more interest in the longer end of the yield curve.
Wow.
Yes.
All right. So what's your part in short? What should investors really look up to?
Well, the market currently has opportunities because there are very good entry valuations, especially for banks. There's opportunity for long-term investment. So, don't panic. It's a good time to buy. That's it for my end. I would say it's a good time to buy.
All right. Thank you so much, Ivy, for those comments, and we certainly look forward to really advising more and more investors that, you know what, as she has said, it's certainly a good time to buy. We'll leave it at that. Please remember you can always give us feedback at the social media handles appearing at the bottom end of your screen. Thank you so much for your time. See you next time, same place, same time. Bye-bye.